Hi, everybody. I hope this finds everyone well. We're very excited to be with you this evening for the Live Event Coalition Town Hall. My name is Nancy Schaefer, and together we are part of the Live Events Coalition. The coalition was created, to provide support and resources for our industry in this extremely complex and scary time that we're all living in. And through some of those things, one of the things that we want to do is bring to you resources that may help all of us get through that. And so following this presentation will be recorded and it will live on the Live Events Coalition website. So if there are any questions that you think you missed and you want to follow up with it, after this, just go to the liveeventscoalition.org and you'll be able to find the recording. So before I turn it over, I just have a few disclaimers that I want to run through before we get started. First, please be kind and understanding to everyone. Please avoid self or company promotions on coalition webinars. Please remain nonpartisan. Please continue to support each other in our industry through this tough time. And while the coalition members are trying to share as much information as possible, we're figuring it out day by day, and we appreciate your patience. It is the policy of the Live Events Coalition to comply in all respects with federal and state antitrust laws. Discussions of any matters relating to competition among our attendees or relating to practices that may restrain trade with third parties is not permitted. These prohibited subjects include pricing, allocating territories, boycotts, or any other statements that may be considered anti-competitive. And finally, please note that while the coalition members may offer advice and ideas, we as coalition members are not experts or legal in financials. Our panelists, however, today are experts and will be able to provide you with some insight. However, as each area is different, following this call, if you have any additional questions, please seek out someone who is in your area because laws may be slightly different depending on where you are. So now that I've done that, it is my pleasure to turn it over to Jessica Dalka. Jessica is a member of our coalition, and she is also the creator of Chicago Planning Magazine, and she is going to be our moderator this evening, and she will welcome the rest of our guests. Everyone be safe, enjoy the evening. Thanks so much for joining us.
Thank you for that warm introduction, Nancy, and for going over the rules to remind everybody that this is educational, but again, we do want to make sure that if you have further questions, you're contacting people in your area. So to get us started, I'm actually going to have everyone introduce themselves and their title and let us know about yourselves, and then we're going to hop into our first question. So Dara, we'll start with you.
Okay, hi there. My name is Dara Simon. I'm a tax partner with Cherry Beckert, based out of our Tampa, Florida office. And I also am the industry leader for our firm's hospitality and retail industry group.
Thanks, Dara. And I'm John Carpenter. I'm a principal with Cherry Beckert. Principal means I'm a partner, but I'm not a CPA. Dara's a real CPA. I'm not even a pretend. And I'm based in our office in Virginia Beach, Virginia. And I have had the somewhat surprising but pleasurable experience in the last 30 days or maybe 5 weeks of spending more time with the CARES Act and PPP than I ever dreamed possible.
Nice. Good evening. My name is Jeremy Foreman, and I work as a national account manager with Experience, which is a Merritt's global events company. I also do some boutique consulting in the nonprofit space and work with various organizations. So whether corporate, association, live event, or trade show, you are my people live events. So happy to be here.
Thank you guys so much. So I wanted to start off, I think the big question everyone has is about the loan. So if either Dara or John wanted to talk about the eligibility for the loans and give people a little more insight on that?
Sure, Jessica. This is John, and I'll kick us off. So most everybody who has not been living under a rock has read about the Paycheck Protection Program, which we're just going to call PPP, part of the CARES Act, which was passed and signed into law on March 27th. And one of the hallmarks of that was the PPP, Paycheck Protection Program, initially funded to the tune of about $350 billion. And most recently, they appropriated about another 200 plus. So I think we're up to a total of well over, I think it's well over $600 billion appropriated. And this is a small business program. And to Nancy's early comment, we're not going to be political here tonight. So we're not going to get into talking about Shake Shack and Ruth's Chris and the LA Lakers and whether they were entitled to PPP or not. I'm assuming that everyone on this call is easily eligible for PPP. But the idea here, this is a small business program, and with only a few exceptions around affiliated companies, basically small businesses that had no more than 500 employees were eligible for a PPP loan. Now, that blanket statement, which was made early in the program, early when the program was launched, has since been modified. And, we've had everybody from Secretary Mnuchin to the SBA to various people say, well, it isn't really for everybody, is it? Well, it was never intended really for everybody. The guidelines of the program, the terms of the SBA application always said that this was for small businesses who were facing economic uncertainty, which is a pretty broad term. I think all of us can agree that on any given day, all of us face a little bit of economic uncertainty, and that the loan was necessary to continue the ongoing operations of the business. So we've said right from the beginning, this program was not intended for businesses that otherwise could easily get through COVID-19. This was really intended for businesses that are struggling to get through COVID-19.
Okay. So should this also apply then to anyone who is a sole proprietor or otherwise incorporated, but essentially an individual business?
Absolutely. And the program was originally drawn up to not only cover businesses that are up to 500 employees, but also sole proprietors, independent contractors, single member LLCs, S corps with perhaps only one owner or employee. And again, most of you may have read the initial program was launched on Friday, April 3rd. And at that time, it was open for businesses, being corporations and LLCs. And then a week later, on April 10th, it was open to sole proprietors, independent contractors, and those other kind of single member businesses. Now, unfortunately, the sole proprietors and 1099s were allowed to apply April 10th. And I think it was only the next Monday, the 13th, that SBA had committed their initial $350 billion of appropriations, and the program was shut down then for about a week and until they appropriated more money.
Okay, and then if somebody happens to be able to work for a company and also have their own incorporated company, are they able to collect unemployment and also apply for a PPP loan?
You are, well, you may get away with it, but you are not supposed to be getting unemployment and a PPP loan at the same time. Now, it's certainly worth taking a look at which is going to be more beneficial, because there are certainly people out there who, in their own business, may not have had a very good year last year, and they may in fact do better to collect unemployment based on being laid off of a regular W-2 job than applying for PPP if the basis for calculating PPP is just not very high.
Okay, and Jeremy, I'm going to tag you in here to see in your work experience and those people you know, if you have anything to add to that.
Yeah, our group is interesting in that we operate in every state. And so everyone's rules are a little bit different in terms of what their unemployment benefits will actually look like. And so I think that that is the major caveat, that when people seek this information in a general format, they have to think about the context that they're at in terms of the local state that they're in.
Okay, great. And now that we understand that PPP loans are supposed to be either the loan or unemployment, what can the loans be used for?
The loans are used for, first of all, the period, everybody, almost everybody has read, these are forgivable loans. That's clearly like one of the great selling features of PPP. What can be better than getting a loan and later having it forgiven, right? That's the best kind of loan. And mark this in your calendars. Probably never again in our lives will we see forgivable loans from the federal government. So hooray! But everyone should note that if you get a PPP loan, there is this notion of a forgiveness period. It's an 8-week period, and it starts the day you get your loan. There is no calling time out. There's no saying, oh, today's not convenient. How about a week from now? No, it starts the day you get your money, and it ends 8 weeks later, like it or not. And during that 8-week period, your PPP loan can be used to cover wages, commissions. It's kind of the replacement of wages, commissions, tips, benefits. And these are typical, we're kind of talking the typical benefits like medical insurance, dental insurance, those kind of, it can cover HSA contributions. It can cover employer contributions to a retirement plan, such as a 401k, an IRA, a simple account. It can cover rents. Now, this is not rent on your personal house, unless you work from home, and we can go down that path if we have time, Jessica. But this is typically office rent, mortgage interest. Again, unless you work from home and that is your declared business address, then we're talking interest on a mortgage for your company facility. It also covered lease expense for leased company personal property. So if you have vehicles in the business, the interest expense for that can be covered. And then utilities, which are your common electric service, water service, natural gas, internet, telephone, and even cell phones, although we encourage people not to get too crazy and suddenly think that you can wrap in the cell phones of all your family members, friends, neighbors, and everybody else you've ever known.
And one thing I wanted to add, these expenses that John just referred to were expenses that you can use the PPP proceeds for in order for the loan to be forgiven. So you can use a portion of the loan proceeds for other business-related expenses. However, that portion of the loan would not be forgiven. And so some business owners and some sole proprietors are making the decision to have a portion of the loan proceeds not be forgiven because the loan is subject to a very favorable interest rate. And so they are, which isn't such a bad thing. So some business owners are evaluating how much of the loan they're going to use for the expenses in order for the loan to be forgiven, and how much of the loan maybe they'll use for other expenditures or hold on to in order to keep the business moving when customers do resume using the businesses.
Okay. How, in dealing with the expense aspect in relation to employees, there have been some people, especially for smaller businesses, if they are bringing on people, how might that apply in terms of there's for some companies, they might have a waiting period for benefits or things like that to be reinstated. If they were to do that automatically, are they covered as long as any of the expenses go towards their employees, even if it looks slightly different than what it might normally?
Yeah, under PPP, PPP really does not, it purposely is not designed to really interact or interfere with any of your other benefit programs. So although there are plenty of complications to the PPP program, if you will, the simple part of it is just think about in that 8-week period from the day you get the loan until 8 weeks later, what you're going to be eligible to have forgiven are those expenses we described. They're, just to elaborate a little more, if you're in a business where, let's say, because of COVID-19, back maybe roughly in the mid to late March timeframe, you laid off some employees. You had to either furlough people, lay them off, cut back their hours, cut back their wages, any of those things. Under PPP, kind of purposely, you're encouraged to bring those people back to full wages, bring them back to their full hours. Heck, if you got people who were part-time before and they want to come back full-time and you're welcome to bring them back full-time, then to the extent you've got money in the loan to do that, that's fine. There are no limitations on raising people's wages or increasing their hours. There are restrictions and possible reductions in your forgiveness amount if you cut people's hours or wages, but no limit to giving people more hours or more wages. There's also no requirement that you necessarily have to bring back the exact same people you had before a furlough. Everybody kind of realizes that this is America and people have freedom of choice, and you furlough somebody 1 week and 2 weeks later they may go get another job somewhere, and that's their right. So you're not required to bring back the exact same people, but you're very much encouraged to bring back employees. And if you need replacement workers, then that's fine. Bring on replacement workers.
Okay. Are either of you able to discuss some of the taxation around the loans that might occur?
Well, Dara, you want to talk about that? I don't want to jump in.
Oh, it's okay. So right now, for the PPP loans, if the loans are completely forgiven, then the forgiven balance is not taxable. So just to, compare that with when you're deciding whether to take money from the PPP program or unemployment benefits, benefits that you do receive from unemployment are taxable. So that's something to factor in deciding whether or not to do the Paycheck Protection Program or take those unemployment benefits. John, I don't know if you have anything else to add to that.
And a lot of people, who've never had a loan forgiven may not realize that forgiveness of debt, is and has always been considerable income. I mean, it's been that way in the tax code since the beginning of time. Dara, I don't know, this might be the only time in history that people can have debt forgiven, and it does not, that forgiveness amount does not trigger taxable income.
Right. And the loan from the PPP truly is free money for businesses.
Free money as long as you meet all the requirements.
Correct.
To that point, we actually have a question from our Facebook audience from Danica, who asks if the SBA has provided guidance on how businesses can prove they're using the appropriate ways to have their loans forgiven, specifically if you are a sole proprietor or independent business owner.
The SBA, it was sort of funny. The original CARES, which was signed into law on March 27th, for crazy people like myself who read through hundreds of pages of that. One of the provisions in there says that that within 30 days, SBA is to issue detailed guidance on how forgiveness works. That was March 27th. That 30-day period ended last Sunday, April 26th. Here we are on the evening of April 30th. Unless SBA issued the guidance since we started this webinar, it's still not out. but the intent of the law, we think, is fairly clear. I mean, there's lots of guidance that needs to come out to answer a lot of detailed questions, but the basic framework is there, that the forgiveness amount is the sum of wages, benefits, rent, mortgage interest, and utilities for the 8-week period. Now, to the point, Jessica, the questioner asked about self-employed, or was it self-employed or sole proprietor?
Either or. I think it was applied to both.
Yeah, and let's just take a couple minutes and talk about the different kinds of self-employed or small business owner, single member. When you think about what are the different ways that people can be on their, kind of doing their own thing in their own business, and how does that look from a tax standpoint? There's lots of people out there who get paid by 1099s, and they are independent contractors. They are eligible to get PPP. Their eligibility will be based on basically 2.5 times the monthly that they brought in 2019 from their 1099s. If you're sole proprietor, then you report your taxes on your personal 1040 return, and you do it via a Schedule C, which reports your gross income, certain expenses of the business, and a net income on the bottom line. If you're a sole proprietor, your eligibility for PPP is based on that bottom line net income on Schedule C. We sit here on April 30th. The normal tax filing deadline is April 15th. Everybody knows that. But because of COVID-19, what happened this year, IRS pushed that deadline back to July 15th. So there are many Americans who have not filed their 2019 tax return yet. If you have not filed your 2019 tax return, then the program says you are eligible to borrow against a Schedule C, but you have to complete it. Even though it's not been filed, they still require that it be completed to the best of your knowledge, using the best estimates you can, and you submit it to a bank. It's anybody's guess whether IRS or SBA will ever get around. I mean, if you file your taxes later in the year, are they ever going to get around to comparing a Schedule C that you fill out now with what you finally file, which could be months later? Who knows? I think you ought to assume they will, but there's no telling if they really will. Then two other, I guess, typical structures we see for small single owner or nearly single owner companies. And that is, what if you're an S Corp and you may be the sole owner of an S Corp? Yes, you can borrow under PPP. The corporation is actually the entity that applies. So if you have an S Corp and it's just you're the sole shareholder of an S Corp, you do not apply for PPP personally. You apply through your business or through your business's name, and your eligibility for PPP is going to be based on the W-2 wages that you took out of the S Corp. This could be disappointing news for some people, but we've done enough of these webinars before. We've had lots of questions where people say, well, I didn't take a W-2 out of the business. I paid myself only through distributions. Or I had loaned the business a lot of money several years ago, and since then, my income is just me repaying the loan to myself. Am I eligible for PPP? And sadly, the answer is no. You're eligible only if you took a W-2, and it's going to be based on your W-2 wages, not on the profits of the business, not on your distributions, not on your on your loan repayments. And then probably the last structure we see fairly commonly is maybe you're an LLC, but you're the only member. You have an LLC, you're the sole member. From a tax standpoint, the LLC is not required to file a tax return. So you report that. That looks like a sole proprietor. You report that on a Schedule C. And again, you're eligible to get a PPP loan based on roughly 2.5 times the monthly average bottom line net income on that Schedule C.
Okay.
Jessica, that was a really long answer to a short.
It covers all the points that people have wanted to know. So that's great. And I think a little bit to that point, I know, Dara, you were talking about how people's expenses are applied and taxing and all of that. And both of you were, of course. So I'm going to loop in another great question we have from our Facebook Live audience from Cassandra, who had asked about since they've moved out of their office and employees are working from home, can they apply a portion of their PPP loan to their employees' rent?
No, I'd say no.
Yeah.
Yeah, it's
the rent that it covers is for leases that were in place as of February 15th. So as the law is written now, that would be the only rent that the proceeds can be used for in order to be forgiven.
Okay. And Jeremy, I'm going to give you a second to hop in here with anything you'd like to add to our discussion currently.
Yeah, so it's alphabet soup with PPP and EIDL and SBA. And so for those of us that are S Corps and weren't able to claim last year's W-2 because we just didn't do that, what options are out there for us in this new round of funding that's coming out and those other alphabets? What are the opportunities for people in that position?
Sure. If you're in the position where maybe like you just described, you didn't have any W-2 wages last year because there were other ways to draw income, and frankly at the time they were probably better tax advantaged ways than a typical W-2. But you bring up the acronym EIDL, which is the Economic Injury Disaster Loan Program. And that program was actually put together several weeks before PPP. And that is an option. Now that program, not nearly as well funded as PPP. The EIDL program ran out of, I'm trying to remember their initial funding. It was not even 100 billion. And I think it was maybe less than 20 billion. And SBA ran out of funding for that very quickly. In the second round of funding, which just happened a little over a week ago, they appropriated an additional 50 billion for EIDL. Now, again, compare roughly, say, a total of 70 billion in EIDL compared to over 600 billion for PPP. You can see there's not nearly as much money to go around. And I would say from a process standpoint and a transparency standpoint, I think it's worth mentioning that EIDL, everybody should understand if you haven't checked it out already. EIDL is set up as a SBA direct program, which means the only place you can apply under EIDL is directly with SBA. They prefer you to apply through a link on their website, which I've been to, and it's very easy to navigate, not difficult at all. Now, I think it's getting better, but for several weeks in late March through mid-April, sadly, their website was crashing every day.
Yes.
There is an option through that program to simply go old school, print the forms, fill them out, put them in an envelope, take them to one of those blue boxes with eagles run by the Postal Service and mail it in.
Yeah.
And we were actually encouraging a lot of people to do that when the website was crashing.
So I have heard anecdotally from a number of people that, and there are actual websites that will help you fill out the printed form just so that you can stick it in the mail, because people are grabbing that out of the mail at the SBA and reading those things faster than these technological systems that the SBA uses itself.
Yes, I think that anecdote is correct. And so EIDL is set up to be a broader program, not nearly as strictly structured as PPP. So virtually any eligible business that's not politically oriented or faith-based, or there's certain gambling businesses are not eligible. There's certain categories of businesses that are not eligible. For our group tonight, that's all hospitality driven. Clearly, everyone should be eligible, I would think. And EIDL, I mean, those loans are traditional loans in the sense that they actually have to be repaid, as opposed to PPP, which is forgivable. But they're set up with very attractive interest rates, long-term amortizations. SBA is supposed to be underwriting those with call it fairly liberal underwriting standards, much more liberal than what you would typically be used to out of SBA. But unfortunately, I don't have a lot of experience to relate about how that's actually working in real life, because the program is run by SBA, and because there's just no other avenue to go through. All of us here, out in real life America, the only information we're really privy to is what SBA chooses to put on its website, which is not a whole lot, actually.
That is the truth.
Okay, so I know that there are people who want a little bit more clarification on PPP versus PUA, and if maybe you guys can talk about some of those differences in a bit more detail.
Sure, I'll go over some of them. I mean, when looking at whether or not to get a loan through the PPP or to get compensated through unemployment benefits, you really have to look at your own individual situation and your business, if you're a small business owner, and see which program or which type of benefits are going to give you the biggest bang for your buck, essentially. Which one are you going to get the most money for? So, there's several items to consider. So one item to consider, is we've already talked about, is the taxability of the money that you're going to get. Money that you get through the PPP program, the portion that's forgiven is not taxable to you. However, unemployment benefits that you're getting through the PUA program, those benefits that you receive are going to be taxable. So when you look at the net cash that you're going to get from both programs, you need to factor in the tax that's going to have to be paid on those unemployment benefits. Also, you look at what the different loan amounts. The loan amount through the PPP program is 2.5 times your average monthly payroll. The unemployment benefits, the maximum amount of cash that you can receive, can be upwards of about $1,400 of a weekly benefit. It just is dependent upon the state that you're in. Also look at benefits that you're receiving. The additional income that you receive through the PPP program won't affect your benefits. So you can still use that PPP money to continue to pay benefits. If you do go on unemployment, that additional income that you receive could affect the benefits that you receive. Employers that get proceeds from the PPP program can continue to offer their employees health insurance benefits. If you're not employed anymore and you do choose to take unemployment as opposed to being rehired by your employer, those health insurance benefits are going to go away. Also, you want to look at how you're going to use the money from the PPP program versus the money from the unemployment compensation. Keep in mind, if you do want the money that you receive through the PPP program to be forgiven, to be tax-free, you are restricted on how you can use that money. That money can only be used for a minimum of 75% of payroll costs, and then no more than 25% of the money can be used for the items that John mentioned, rent, utilities, and interest on debt. So you are restricted on how you can use those proceeds. Money that you receive from unemployment, there's no restrictions on what you can use that money on. So there's no right or wrong for every type of sole proprietor, for business. You really have to look at what your individual needs are to determine which program is the best program for you. And for those individuals that are business owners, you also need to look at what cash you're going to need to have on hand so your business can go back to capacity to 50% capacity to 100% capacity when the restrictions are lifted from businesses. So, so you really have to keep in mind all of the different factors to determine whether or not you're going to get the biggest benefit from the PPP program or from those unemployment benefits.
So I'm thinking maybe also giving a bit of context as to how people, especially sole proprietors or 1099s, who may have like an LLC or something like that, should they be approaching this as a relief package or a business stimulus package? Because I think if people go into it as this is supposed to keep me afloat versus this is supposed to prop up my business long term, that might help some people frame how they are going to track how they're using the whatever funds they may be going for.
And Dara, I'll start just comment that, you know, I think when you think of PPP, in my view, I think the intent there was that this program was really viewed as a short-term stimulus. Undoubtedly, you know, Nancy, you sit near Capitol Hill, so maybe you can comment better than the rest of us. But at the risk of trying to get in the heads of anybody on Capitol Hill, I think the intent here was to provide a lifeline to small businesses during the pandemic, in the hopes that and in the hopes that at the end of the 8-week forgiveness period, and clearly I don't think there was any real magic to why was it 8 weeks as opposed to 6 weeks or 10 weeks. Well, it's who knows. But I guess the intent was, let's hope that at the end of 8 weeks, the economy is either reopened or on its way to reopening. So clearly, I think viewed as a short-term stimulus, a lifeline to small business to help them get through a very difficult short-term period, but not intended to be like a long-term capital fix. I mean, I think EIDL, to Jeremy's point, is more intended to fit that role. But, unfortunately, that program just probably is, I guess, fair to say, just not funded nearly, not anywhere close to the kind of levels that it probably needs.
Have you guys heard? I'm sorry, Jessica, one question. Have you guys heard whether or not the PPP program will be replenished again? And if so, for those of us who've already received the PPP, but it was only for the 8 weeks, will we be able to extend that? Because in fairness for our industry, 8 weeks is not going to come close to anything that we as an industry need.
Great question. At this point, it's all speculation. I'm not really hearing anything that says that they're going to extend the 8-week period to something longer. There is, I think, debate every day on Capitol Hill about whether they need to put more money in. Now, the second slug of money, the 200, and I think it was roughly 270 billion, or maybe it was over 300 that was appropriated about a week ago. That appropriation is still holding up in that they have not depleted that. It's anybody's guess whether that second appropriation will run out or not. But at this point, there is still money out there. Haven't seen anything on the news to indicate that they're imminently running out of that second appropriation. Nancy, I think you kind of have a great question, which is, so we get to the end of 8 weeks, which is, we're roughly halfway into that period. Program started April 3rd, so we're getting darn close to the halfway mark. And we could probably send a polling question around everyone and say, how close do you think we are to reopening? I'm not gonna wade into those waters, but will 8 weeks be enough? Who knows? And if it's not really, then is Congress prepared to do anything? I'm not so sure.
Yeah, and it's important to remember that the rules are being clarified and expanded on a daily basis. So there could be additional clarification, modifications to it as we move forward. So I know just in talking with a lot of clients in the hospitality industry, like I know here where I am in Tampa, restaurants starting on Monday are able to go back to 25% occupancy. So obviously that's not going to, the 8-week period is not going to be enough to keep them going at that 25% capacity. So things are evolving on a daily basis. So it's important that everyone stay in tune with what's going on and all of the changes that are coming out. Certainly there are many influential members of the hospitality industry who are petitioning Congress for changes to the existing rules. A lot of restaurants are having difficulty in satisfying the requirement for the PPP loans that 75% or more of the proceeds have to be used on payroll costs. The issues there is that when they are offering employees the option to come back, employees are choosing to go on unemployment as opposed to being rehired because they're making more on unemployment than they were being employed. Also, a lot of hotels and a lot of restaurants, they simply don't have anything for the employees to do. So that's a concern also. I'm paying employees to do nothing. So these are all concerns that are being vocalized to Congress. So we do anticipate, within the next few weeks, additional guidance to come out to address these concerns. Whether or not it's in our favor or substantial changes will be made, that we don't know. But we do know that the laws as it's written today will probably be quite different than the laws as they're explained and clarified in the week or two to come.
They're building the plane as they fly it.
Exactly.
Yes, they are. And hey, Dara, I'm going to jump in with you mentioned something about bringing workers back and not having enough for them to do, at the risk of whether this jumps into someone's question or not. But I'll just point out, there is no work requirement under PPP.
Right.
There is no productivity requirement. So we've had this question many times where people say, well, all right, I run a restaurant and because of health department orders, I can only do curbside, whatever. I've got my skeleton staff. If I get my PPP loan, what am I supposed to do? And our answer is, well, bring people back. And they were like, well, but what do they do? And the answer is, it's whatever you want them to do. I mean, if you want to require them to come to work and roam around an empty restaurant and clean the same tables 50 times a day, okay, fine. Frankly, if you want to pay them to sit at home and play Fortnite, that is fine too. I mean, at the risk of sounding really silly, but but seriously, there is no requirement that they actually come to work. There is no requirement that once they're there, they actually really do anything. I mean, the part of the idea, and again, at the risk of sounding kind of silly about it, everyone just probably needs to recognize, I mean, part of the goal there was the concept of a ready workforce. If you're running a business and you're struggling to get through the pandemic, it to the extent that the day comes when you can reopen, at least partially, wouldn't you rather have employees already on the payroll who you can call up and say, hey, good news, Monday we're reopening at least 25%. I need you to come in, as opposed to not having anyone on the payroll and you're ready to reopen, but there's no one there, and now you got to go find new hires. So that concept of having a ready workforce was a big part of the policy discussion that went into PPP.
Okay, so I think these have all been really strong points, and I feel like we've kind of been integrating our questions that we've gotten from the audience as we go. And so in case we had any latecomers, I'm just going to quickly recap some of the big points that were major questions, such as the fact that many of the utilities are included with the loans. However, things such as your personal rent does not apply unless potentially you were working from home. And of course, we want to make sure people understand that if you are a sole proprietor or somebody who is has your own business, you have to choose unemployment or the PPP loan. You cannot do both. And to speak in terms of working with your employees, I did also want to wrap in the point. We have a great question from somebody who is asking that with the 8 weeks that the PPP loan is supposed to sustain your business, after that 8-week point, if you are not able, if there is no more additional funding, if you're not able to get a loan, and your business is not sustainable from that loan, are you able to then again lay off your employees? And will they be able to collect unemployment? Do we have any insight on that?
You absolutely are allowed to re-furlough or re-lay off employees. There is no retention requirement. There's nothing that says at the end of 8 weeks that, oh, you have to keep them on payroll for any length of time. You can lay them off at 8 weeks and a day. And Dara, unless you know anything different, my understanding is that if they're laid off again, then they are eligible to file for unemployment again at that time.
Yes, that is correct.
And I know that some people have had some concerns. I feel like I'm here in Chicago, Illinois. There's been kind of a 50-50 of people who have been able to get unemployment and people who haven't. But for those people who do straddle the line, whether they pay themselves as a W-2 employee from their company or they're, a sole proprietor, however that works, are you able to apply for both and hope for the best? Does it matter if you haven't used one or the other and you're waiting for whatever comes in first?
I'm not aware of any reason that you cannot apply for both. And certainly the PPP process, as has been well publicized, excuse me, does not always move at lightning speed. So yeah, I don't think there's anything wrong with applying for both and see what comes through first. Nothing, if unemployment comes through first and then later you get a PPP loan, okay, notify the unemployment office,
Discontinue
benefits at that point and take the PPP money and hopefully that tides you over, for at least 8 weeks and then see where you stand then.
So if you were to get unemployment and then cut off your unemployment once you received a PPP loan, do those two interact in terms of your business? Like, do you have to then just go, like you said, for that 8 weeks moving forward? Do you have to pay back any unemployment, or are those mutually exclusive?
Dara, I don't know if you have any better insight. I believe they're mutually exclusive.
Yeah, I would agree. Those are mutually exclusive as long as if one overlaps the other, you cut off the first one, then they should be mutually exclusive.
They no double dipping.
No double dipping.
At least in theory.
Yeah.
Jeremy, do you have any other points you would like to add at this point in the discussion?
Yeah, you know, a lot of people are asking, where do I go for help locally? And one of the resources of the SBA is SCORE, which is, you know, a network of small business advisors that are local to communities across the country. And so if you go to score.org/coronavirus, they actually have a small business resource that's there that answers a lot of your basic questions. And you connect to a mentor that's in your local community that can advise on what your state is offering in terms of, you know, unemployment, because they're plugged into that ecosystem.
And one other thing I know that has been a big issue for a lot of businesses and sole proprietors, independent contractors that are applying for the PPP loans is with regard to the lenders. A lot of businesses are having difficulties with some banks getting their loans processed. A lot of the larger banks are inundated with these PPP loan applications, and a lot of the smaller companies and independent contractors kind of feel like they're low men on the totem pole and their loans aren't being processed. So based on what I've seen, a lot of business owners and sole proprietors are having much more success going to smaller local banks as opposed to going to the big guys. And we're seeing that the loans are processed a lot faster through those smaller community banks. So if you are considering applying for the PPP loans, my recommendation is to start reaching out to those local banks now, sooner rather than later, because as soon as you can get your information and your application to them, the quicker they can get that loan processed.
And also credit unions would be a part of that mix as well, right?
Yes, absolutely.
Yeah, there are, there's something like over 800 SBA approved lenders. Virtually every bank, certainly most of the big credit unions. And there are a number of non-bank finance companies that are SBA approved lenders. If you go to the SBA website, I mean, the PPP program is run through an existing SBA program that has been around for years and years. And it's called the 7A, number 7, letter A, 7A program. If you go to the SBA website and if you just look for a list of 7A approved lenders, it's posted out there. Again, it's been out there for years. There's new lenders that have come in just because of PPP, but there are many, many lenders out there. And I totally agree with Dara. The community banks tend to be moving quicker and a little more flexibly, but also keep in mind there are some non-bank financial lenders out there that have, you know, pretty nice little easy to use websites set up, and you can apply online, and oftentimes they're moving also pretty quickly.
Would you say, John, that in terms of a non-bank, like something like PayPal might be an example of that?
I don't know about PayPal, but there are finance companies like a New Tech Commercial Finance. Most of these are finance companies. Many of them are like receivables finance companies, AR and inventory finance companies, and they happen to do SBA loans too. So honestly, I don't know if PayPal's in there, but there are a number of these non-bank, you know, not part of FDIC finance companies who are doing quite a bit of volume in PPP.
Yeah, I understand that PayPal, and I want to say Intuit, who makes QuickBooks, is also another provider that's out there, and they are able to process the underwriting in days, not hours, or you know, as opposed to weeks and months on end, because they're using their technological prowess, which is a little bit better than the government speed of doing things.
It's also an opportunity for anyone in this group that are small businesses, 1099ers, to create relationships with some of the smaller banks where you won't feel like you're the little guy in a really big pond. My experience is I bank with a big bank and I've started a new relationship, and my small community bank funded me within a matter of a week. And it was a wonderful relationship. And as a small businesswoman, I will now start to bank with that small bank. So it's another opportunity to be seen. And in our industry, unfortunately, that is one of our challenges. So it's not the answer, but it may be a bit of a silver lining to begin to do that kind of outreach.
And I do believe a lot of the larger banks are going to see several small business clients of theirs moving their business relationships to the smaller banks as a result of the treatment and the speed for which their loans were given by these big banks.
So in talking about funding your business, I wanted to also ask if, let's say for some reason you're able to get a grant. For example, in Chicago, the University of Chicago gave out a few small business loans locally. How might that revenue, if at all, impact any sort of loan or unemployment to your business, like a PPP loan?
Dara, you can speak to unemployment. There is no correlation between that and PPP. So you can certainly, if you're fortunate enough to get one of those type grants, I'm not aware that there's any impact on PPP. No need to reduce your loan amount, repay anything. Totally independent. Dara, any thoughts on unemployment?
For unemployment, it depends on the particular state, but certainly unemployment benefits can be affected based on revenue that you get from other sources, whether they be grants or not. So that's something to certainly look into at the state level to see whether or not those particular grants are going to have an effect on your unemployment compensation benefit.
All right, and we're getting into our final minute. Our final minutes of the town hall here. So again, quick recap, talking about the fact that if you have a PPP loan, it is going to be different than if you have unemployment, and they cannot be overlapping. It can go towards things like utilities. However, your personal rent does not apply for PPP loans if you had previously had a mortgage. It might be slightly different, or lease, but it might be slightly different if you are a sole proprietor or working from home. We have had a question as well from some people regarding insurance and insurance payments. If they have purchased insurance, like any kind of event insurance or business insurance, and they are waiting on payments for that, or they feel that they should be getting it and they aren't. Have you guys had any insight or heard anything about how potential insurance is affecting or being considered by the SBA or for the PPP loans?
I don't think there's any consideration there, and which I think is a kind of a short way of saying that's a good thing. If you're waiting on some sort of insurance settlement, I would not wait on PPP just for that, because SBA is not taking that into account. That has nothing to do with the underwriting of PPP. You will qualify for PPP based on that history of wages and health benefits. It has nothing to do with insurance.
Yeah, I mean, keep in mind that the PPP loan is 100% based on payroll costs. There's no other costs or revenue factored into the PPP loan.
Yeah. Well, some health and benefits and things, but yes, when Dara says payroll costs, it's that umbrella of payroll, benefits, retirement contributions, things like that. But yes, agreed. Any business interruption or event insurance has zero impact on that.
All right. Well, this has been fantastic. We're coming up on our hour, so I'm going to give both Jeremy and Nancy an opportunity to have any last words on this.
Yeah, sure. I want to encourage people that are pursuing the unemployment route to visit the Department of Labor's website. The U.S. Department of Labor has a dol.gov/coronavirus site that is their set of resources, and they can link you to the information for your particular state.
One quick question before we go, and that is, there is a question about documentation. And I know that I asked the same thing when mine was funded is, how do I prove that I paid 75% of it and I didn't just go buy a new gown? So there are a couple of questions of, do I need to keep it separate? Do I have to document? And my gut tells me we don't really know the answer, but what would be the suggestion and the recommendation?
Based on the guidance we have now, we think we know the answer to most of that.
Okay.
Yes, you do need to document. And the key is going to come when it's time to put in your application for forgiveness. The banks are going to be requiring that you provide not only an accounting, which can be simply a spreadsheet, but they are going to require proofs of payment. So at least that's the way the law is written. Now, there could be some changes in the implementation over the next few weeks. But yes, at least according to how the law is written, you will need to provide things like payroll reports, copies of canceled checks, ACH confirmations, maybe just copies of bank statements. But you will need to accumulate those proofs of payment. Probably a good idea if once you get your PPP loan, just set up an electronic or a paper file, start saving those copies, because you will need to provide those. There is no, although some banks may ask you to put the PPP money in a separate account, there is no requirement for that. We don't really think there's much point in doing that unless for some reason your bank just wants you to do it that way. And for the accounting nerds in the audience, if you're wondering, should you set up like separate accounts in your general ledger and your accounting system in QuickBooks for this? We say no, certainly no requirement for it. And in fact, we think that probably creates more problems than it solves when you get time to do your year-end tax reporting for 2020.
My bank just suggested that I keep it in a separate account just for those reasons, so that in the event that they do come back and check, I don't have to go through all of those others. So that was the only recommendation that they made to me. Not a requirement again, but it was just a suggestion that my banker actually made.
Sure.
Sure.
I know we are running up on a hard deadline. I want to thank both of you, but I also want to say to our audience, remember, we are in this together. We are here as a resource. We want to support you and provide you any kind of guidance and resources that we can. Please go to the website. There is a contact button. There's a join button. You can ask us lots of questions. Please make sure that you go and you sign the petition, which is almost at 500,000. And we also have a letter generating campaign on there as well. We're an industry, as I said earlier, that is kind of not seen. So our voice needs to be loud, and we need to be kind to one another and remember that we will get through this. It's not going to be easy, but we will get through this, and we will get through this together. And so as the members of the coalition on this call, we thank you for trusting us, and we thank you for supporting us, and we look forward to continuing to provide you with lots of really important and valuable resources. And again, John and Dara, thank you so much. It has been a lot to absorb, but I think it has been very, very valuable.
And I do believe we are recording, so people can go back and watch this if they need to review the wonderful information that's been shared with us today.
All right.
All right. Thank you all. Thank you, everyone.
Thanks, everybody. Have a great evening.
Bye-bye.
Bye-bye.